Okay, traders, today is May 3rd, 2013. It is Friday, midday. It's actually kind of early for us to be doing a class video, but it's quite important that we go over this. This is the 1017th installment of these videos. My name is Oscar Carboni, and welcome. Good morning, good afternoon, good evening, traders from across the globe. Here we are. We are in a very, very interesting area right now, OMNI. Let me just say this. Futures trading is extremely risky and can cause substantial financial loss. Futures trading is certainly not suitable for most traders out there, to be honest with you. Futures trading is not suitable for all trading accounts. If you do not use stops and if you do not have risk capital, just get up and run because, man, you get your butt kicked in this business if you don't know what you're doing. All right, traders, we are looking at the emini S&P. And we have had this little problem lately that we are being held captive by something that I have dubbed the, I guess I've dubbed it this. I like to call it the April-May death knell. And basically, we've seen the last four videos, in the last week of April, first week of May, in many cases over the last 5 years, the S&P's gotten pounded. But you generally don't make new highs if that's going to happen. So today completely changes the landscape, and that's what this class is about. So it appears that we probably will not get the April-May death knell. And a round of applause for these markets. And thank you, Fed. Thank you, printing presses. Thank you for just buying the crap out of the bonds, because it's probably going to blast us right through the death knell, which a lot of it has happened already. Now, traders, remove today. You remove today, and you still don't know what's going to happen here. Yes, we're in an F flag. Yes, we are also looking at the daily S&P. Yes, we are also in what could be called an inverted head and shoulders, which would be bullish with the F flag in the right shoulder. But if you remove all of this and look at it with the idea that the possibility of that April-May death knell was still looming, you can actually call this a head and shoulders that had a head test. You go shoulder, head, shoulder, and then this was your head test, and it got a little troublesome because it stopped cold right at the head and started to come off a little bit. And then yesterday recovered a little bit. So which one of these is it? Is it the inverted head and shoulders? Is it the upright head and shoulders? The market has to tell us. I cannot make the choice for the market. You know me. I just point out the stuff I see on the chart. As it turns out, this is going to be the inverted head and shoulders. And again, thank you so much, markets, because I don't like the downside. You guys know I'm a bull at heart. So if it is the inverted shoulders, and that's the F flag in the right shoulder, and then you add today's movement in, and voila. There it is. Shoulder, head, shoulder, F flag or bull flag in the right shoulder, and you get above. Thank the Lord this market is going. And I doubt very much the April death knell gets in our way any longer. But that is what has been troubling me. And you can see it, traders. It's obvious. Which of the two is going to be real? As it turns out, it's this one. Thank goodness. So that's what I've been looking at in the E-mini S&P on the daily. Let's look at the weekly. Traders, the E-mini S&P weekly bar. Inverted head and shoulders. These are charts that we've used in many classes over time. These are long-term charts now. You've all seen these before. Inverted head and shoulders, which is bullish. This yellow trend line, which was held many times, maintained a bullish posture for us. These red lines coming across are resistance levels from years ago. Years and years ago. All coming across, and guess what we did as of this week? We've bested all of them. Another round of applause. I'm getting excited. Thank you. Thank the Lord. I was very worried just a couple of days ago. So here we are now besting everything that was giving us trouble all the way through here. So very, very nice to see such things happening in our daily S&P. Let's go look at the NASDAQ. Traders, when you look at the NASDAQ, undoubtedly this thing has gone. Just remove this for now and look at how we've broken out of this major resistance trend line and parallel channel. Now, traders, as you know, we are day traders, so it's okay to be bearish on a day like this. It's all right if you were bearish on this day that you hit that top trend line and it dumps and settles at the lows, and it's okay to turn around and get bullish a day or two later, because that's what we do. We're day traders. So if anybody says to you, oh, you were bearish yesterday, how could you be bullish today? Just put the chart in front of them and say, well, how could you have blinders on? You have to trade what the chart shows you and not what you think may happen. As you know, I've been bullish as the day is long, but I haven't tried to just trade bull side only, because when you get a sell signal, like something like this, you have to go with it, even if you're a bull. You got to take the signals, because otherwise you're injecting your opinion into the trade. So I don't inject my opinion into the trade. And when we got up here and OMNI went bearish, so did we. But the market has turned. And the market doesn't want to hear anything about the downside, and it is bullish. And my apologies for not getting us long today, traders. We were there. We had the flash. We put the trade recommendation out last night to get us long today. We were within $2 of the buy spot, and we just didn't get filled. So my apologies, I didn't get us into this mess today. But you know me, you come around Sunday night, I'll be waiting to slug this thing once again. So that's your NASDAQ. Let's look at the Russell. Traders, the Russell, shoulder, head, shoulder. So we knew we were looking at this all last week and the week before and the beginning of this week and saying, uh-oh, this could be troublesome. You've got a shoulder, a head, a right shoulder, another set of head and shoulders inside the right shoulder, and then the head test comes. Now, what gets scary about it? The head test comes, and what does the market do when it gets there 2 days ago? It dumps miserably, and it breaks through what we call the F flag. Watch this. It breaks through this F flag and just falls apart. Now, usually that's the end of an F flag's life. And we know that when you see this in an F flag, it's basically the end of the F flag's life, and down you're going to go. On the same day, OMNI's got a bearish sell signal, and I'm thinking, oh no, it was shoulder, head, shoulder, another head and shoulders in the right shoulder, a failed head test. We're in big, big trouble. That's what's going through my mind Wednesday, Tuesday, even Thursday, and then we get this. And within 2 days, bing, bang, above the head, this goes away. The head test goes away. Watch this. This goes away. All of this goes away. You can leave this if you want, but let's just get rid of it, because now we got to look at this in a completely different light. Now you got to look at this and say, all right, so that wasn't a head and shoulders. Now it is time for us to see what this thing is. And if you ask me, of all the markets, this has been in some really weird flat. I don't know why. Let's do it with this. This has been in some really weird flat where everything else has been taking off. So this market, the Russell, has been in more of a flat than the other markets. I mean, just look. Emini S&P, right? That hasn't been flat. That's completely different from the look of this Russell. These are both daily bar charts. The Russell has been in a flat compared to the other markets. Well, as of today, we have bested that flat, and congratulations to the Russell. Now we look at this in a different light, and we go, okay, we're above the flat. What's going on here? Maybe we just have a new parallel channel that we're going to follow, and that's what's happening now. So I'm going to look at this as a new parallel channel and follow it up. And if the parallel channel gets tighter, we'll tighten it. If it gets steeper, we'll steepen it. It may turn out to be that this is the parallel channel that's building right now. And not the one that I just put in, but the one that I just put in fits, and this one you got to force fit it. So I'm not going to force fit a channel. Right? You could have that, but I don't know. I like channels to be natural. So let's just put this where it naturally fits, low to low. And then we'll just drop this guy on top and say, for now, that's the channel, but that's what I think we are going to be in. And of course, now you can take this and call it an inverted head and shoulders, and not the upright head and shoulders that we thought was largely forming. Once again, bravo for getting us out of trouble. Bar charts and markets, thank you so much, because I really didn't want to see this thing take a nosedive. So now that we're back in the bull camp, as we should be, we're day traders, we're quick. This is what we're seeing. Let's go look at the weekly. Traders, this chart you have seen many, many times. Let's just go over it. Inverted head and shoulders, just like the ones that we were looking at a moment ago. Inverted head and shoulders leads to a bull rally. Comes back down, has another inverted head and shoulders, leads to a rally, inverted head and shoulders, rally, inverted head and shoulders, rally. What this is right here, this is what this is going to turn out to be now that the market has spoken. See this right here? All this is going to do is represent this. It's a dip, and now you will go into one of these. We had our dip, and we will now go into an extended rally. That's what's expected next. A long, extended rally. Now, you do have what some will point out today as a double top, and I would like to see it get past this, but that's only in the Russell, and I don't think the Russell counts here. The other markets have gone way stronger than that. So, what you're going to find is this, just like it was this, and, of course, just like it was, and let me just fix that because that's ugly, and just like it was this. This is what I think we're going to find is all this is right here. Just get ready for another one of these extended moves like this one. Extended move, extended move, extended move. Here comes the extended move. That's what the chart shows us now. Look at this German DAX on a daily. It had the big swoon down, but as of this day, it has recovered. It's back into the major trend channel, and it's above this previous high. It's above this previous high. Very, very solid performance. Very solid performance in the last week out of the DAX. The markets are leading the economy. They are futures markets. We deal with futures markets, right? They do lead the economy, and you can see that the German DAX future is leading the economy higher right now. Looks like Europe at some point will show whatever the DAX is pointing out to us now. The European economy will probably show it. Let's go to the weekly. Interesting chart. Let's take a look at this whole chart. Traders, this purple line was resistance from 2007. That's a major, major resistance line. When you got above it, you did it in the form of this big blue flag inside of this red parallel channel. Then you came down through the channel, came back up. This is all on a weekly in the DAX. So what I like to do is see if channels are simply expanding. Once you get through it and recover, you have to see if it's still parallel and is it simply expanding as a channel. So I take the channel without changing anything except the parallel will remain the same. I'll just shift it. And I'll say, all right, maybe, just maybe the channel grew. Does it fit on top? And you put it on top, and if it fits, then you have to wonder if the channel just grew. So when I put it on top, kind of it fits to me. Looks like the channel just expanded, that's all. So now we have an expanded channel. You can leave the top of it down here, or you can catch that high at the top of the flag and put it right here. Either way, that channel fits. Looks to me like the channel simply expanded. DAX pointing much higher right now. Traders, this is your June gold. This is the market that Omni has been just trying to sell and selling almost successfully, with the exception of a few mishaps, every time a signal sets up. Now, you've seen this chart many times. I pointed out that Omni was giving us a possible warning top at 1780 right there. And then Omni gave us an absolute top call at 1680 right here. We've made a series of head and shoulders with parallel channels, breaking down each time you broke the channel, you would break and create a right shoulder. All of that has happened, and we have continued to move lower in the same fashion all the way down. Now it's gone from the head and shoulders with the parallel channel repetitive pattern into a repetitive pattern of bear flags. Here's a bear flag in blue, big breakdown to another bear flag. Why am I selling gold? Well, we've gotten under the bear flag, right? Let's expand these channels just a little. We've gotten under the bear flag and tested this red resistance line. At the same time, we've been bouncing off of it since this day when I started to point this out to you. I pointed it out to you a few days ago right here. Well, here we are now on the bottom side of the flag. Same thing, a little run up for stops today. If your stop was too shallow to hit your stop, but it turned around and dumped, and that looks poised to do what a bear flag is supposed to do, like this one did. It's poised to dump. This market should come off. So that's what I'm expecting when you look at the daily in the gold. I'm expecting to come off because I'm following patterns. Bear flags, head and shoulders, it's what they do. But if you look at us, if you look at this market, now that it's below this red support line, look at how well supported it was. It's no longer a support line. You can move it higher, and then we've broke it completely already. But let's leave it at the low here, at the low where it belongs. We've bounced into it, taken out some stops, poised for lower as time passes in your gold market. That's on your daily. Let's go look at the weekly. Very interesting happenings here on the weekly. Traders, once again, major support was violated right here with this trend line and parallel channel. Then it went into a secondary parallel channel on the way down. And here's what I found interesting. If you remember, I just mentioned the other day about triple tops. First you get, or triple bottoms, you expect, being that there's a bottom, we'll do the bottoms, triple bottom, you hit, boom, bounce, boom, hit 2. Boom, hit 3, and then bounced. I always expect a pullback after the triple of anything, then the big move comes. Well, on the weekly, bottom 1, bottom 2, bottom 3, there's your bounce. Bear flag bounce, no less. Look at this. Bounces into what you can easily construe as a bear flag, and then the death knell is struck. There's your bear flag, and boom, down you go. Boom. Now, look. Check this out. We're not done. Watch this. You're going to get really happy in a few days if this gets violated. This is the last chance for gold to survive. If gold breaks the 200 bar moving average, which, look at this chart, it does not break the 200 bar moving average. It's not what gold does. That's not what happens in gold. This is years and years of gold and the 200 bar moving average. If we break the 200 bar moving average, it's being tested now, this thing gets destroyed. So, what I'm expecting now is what you're seeing, the pullback to this channel. DES, I see what you're saying. Do I expect it to pull back to this red channel? I do not. This channel is the newest one that's formed, and I expect it to get back into this channel and fail and dump. So that's what I'm looking at in gold, and gold is very, very interesting here. Erase the weekly, because we do not trade weekly charts. We trade daily charts. We come back to the daily, and you have all the evidence you need, because we've had the break, we've had the break, and we've pulled back to the channel. That's the real deal right there. So I don't expect us to get back to the 1580s. The stock market is continuing higher. You're going to get gold to continue lower. So I would expect gold goes lower, even if it rallies somewhat. It's not going to get too much higher because there's a lot of selling taking place. So now I'm going to take you to a new spot, something I discovered last night. Traders, you know I am a creature of repetitive patterns, right? It is what I live by. It's what I've lived by my whole trading career. When I find one, I get extremely excited. Let me show you a repetitive pattern. It is uncanny. Now, let me just start off with one thing. These are not Elliott waves. I hate it. I would never use it. Elliott is ridiculous. Just want you to know that. All right, so these are not Elliott waves. I'm reiterating here. All right. Hey, Randy, nice to see you, buddy. Here's what we're looking at, guys. This is Euro currency weekly bar chart. This is an uncanny repetitive pattern. You come off of a big dump for whatever reason. Boom, I'm calling this 1. You rally up to 2. You come off. You just get right to this red line. 3. You rally up for 4. You come back down for 5, and you have this explosion up here. Now, if you look at this chart, big pullback to 1. You rally up to 2, almost exactly what happens here. You come back down to the line for 3. We come back down to the line for 3. We rally up for 4. You rally up for 4. You come back down to the line for 5. But here's what's really interesting. Look at these 2 bars when you come down for 5. Look at these 2 bars right here. What is that about? I mean, really? Could it be that giveaway? Is it that simple? Look at how you come to this little V right here on number 3. Just exactly the same. You rally up to number 4. Almost the same sort of look at number 4. You come down to number 5 with the 2 reversing bars. The big bar down, the reversing bar to the next week. And off you go to number 6. Here we are. We've had 1, 2, and off we should go to number 6. Now watch this. If you simply take this and see where it went, your projection is here. For the euro, out into the future. How sick is that, OMNI? That is a repetitive pattern. Does everyone see this? It came out of the clear blue. It's not really part of the class I was planning on showing you today, but it jumped out at me last night. I almost fell off my chair. I went, oh my goodness, that is as clear as the day is long. So I think this is exactly what we're seeing. And if you want me to show you how similar, it's almost a really ridiculous head and shoulders right here, which is upright. So something is going on here. That is a repetitive pattern. I don't care what anybody says. These are the things I live by. And I kid you not, we are going to see this thing reach number 6 at some point, unless suddenly repetitive patterns just quit working, which I tend to doubt that that's ever going to be the case. So traders, a rare find. These are not Elliott waves, but a rare find. Something I didn't plan on stumbling upon, and I don't know what we'll do with this information, to be honest with you. It's on a weekly chart, and we're not weekly traders, but it is telling me that the euro is going to end up here at some point in our future. Traders, this is what I wanted to present to you today. Let's go back to the other chart now. Let me just round this off with 2 more charts for you. You may remember this from the last video. We had shoulder, head, shoulder. We thought this would be a head test, and we wondered, would it fail? So here's your head test. With what we just seen in the other markets, you got to consider this is not going to stop at all for the head test. And in reality, you've already taken out the major trend line. So what do? We change what we're looking at. We get rid of these circles, and we say, obviously, that is not what was happening here. What was happening here is it was building resistance. It finally coiled up enough in this area to blow through that resistance. And now we simply start following whatever this is and see where it wants to go. Well, we've already blown through that. So it's getting even steeper than that. So we'll erase this one. And we'll consider that maybe this whole thing, with the exception of a blow through, was a flag. Maybe, just maybe, we've been looking at a flag for quite some time in this market. Maybe that's all that's been all along, traders. This is a big bull flag on the daily. Let's go look at the training weekly. It's going to get interesting. Does anybody remember this chart? This, I know some of you should remember this because we've been using this for quite some time. Does anybody remember this chart? We've been using this for a long time now in our classes to figure out what should happen in the transportation average, the weekly. Do you remember when I drew in this projection and we all thought I was crazy? A few months ago. I thought I was crazy too, by the way. Well, look at what's happening. We're almost halfway there. Target is dramatically higher, the 7250 area. Do you guys remember me doing this? So now that the bullishness is back, we must use all our bullish tools and see what's going on out there. So that was our projection from several months ago in the tranny. I think that is exactly what we're seeing now. That's why we're here. Dow Jones Industrial Average, look at this. If you recall in one video ago, without this bar, I said to you this channel has been broken, tested, violated, and it's done. It's over. All right, this is what we were looking at when it was down here. You give it one day, and bam, you have to change the statement. And you have to say, this channel has been violated, tested, and it held. That's what you got to say now because we're back in the channel. And hey, remember, we are day traders. This stuff happens every night when I do my analysis. Bullish today, bearish tomorrow. That's our lives, traders. So you can't say, well, Oscar, if you were so bearish yesterday, I'd say to you, well, you call this a flat top? You call this a four-legged Gann top if you want. You call it a flat top. You call it broken through what was support, now resistance. You couldn't be bullish that yesterday. If you were bullish this yesterday, you're making believe. You're injecting your opinion into a market. But you see today come in, and then you can clearly become bullish again. And that's the way it works as a day trader. So here we are. So that's your Dow Jones Industrial Average on the daily. Let's look at the weekly. Look at this chart. From the 2009 lows inside this major purple parallel channel, it's been in it forever, holding well. Then it had this secondary channel, bull flag at the top of the channel, got above it. Now we are in our extended F flag, and extended is what will happen now. You will have an extension that will just go and go. You'll have some slight pullbacks, but nothing major, and we will go all the way almost to the top of this. That's where we should end up at some point. So that's where we stand right now with the dailies and weeklies as of Friday midday, May 3rd, 2013. Traders, remember these pictures and don't forget this one. This is something that we're going to have to think about. I mean, wow, that's a really interesting repetitive pattern. Traders, thank you so much for coming to these classes. I hope these classes, and this class particularly, helps to keep you in tune with where markets will go Sunday night through Monday, and we'll pick it up from there. Once again, thank you for coming to my site. Thank you for coming to my class. And always remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and we all know what that is. Stops are in. Emotions are out. Rock and roll, and let's go for the extended up move. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.